Hello traders, it's your boy Gift Ubakwe. Welcome back to my YouTube channel. For my returning subscribers, welcome back guys. I love you guys. Thank you so much for the support. We are presently sitting at 185 subscribers. Thank you guys. You guys are amazing. I appreciate all the support. All right, for the new viewers, for those who are just watching my video for the first time, I'm Gift Ubakwe, and all I do on this channel is document my forex trading journey. I've been trading the forex market for the past 1 year 5 months, and I'll keep documenting my journey, and let's see what the next few years holds for me on this journey. All right, in today's video I am just here to show you the best time frame to trade on. Now, there is no exact formula to this, but I'm sure by the time you're done watching this video you would understand why I say these are the best time frames to trade on. All right, so let's get straight into this. But before we go into that, please do well to like this video if you like it, and subscribe to my YouTube channel so you stay updated with my progress. And of course, I'll keep sharing only quality values on this channel. All right, without any further ado, let's get straight into this. Okay, so what are the best time frames to trade, or what is the best time frame to trade in the forex market? All right, now somebody has been asking, or someone asked me to review who my mentor is. I'm going to do that shortly. In the subsequent video, I'm going to review to you how I learned to trade, you know, who taught me to trade, and why my strategy is not necessarily Falcon strategy. I don't trade the Falcon strategy. All right, so let's get straight into this. So the first thing you want to do is, you can start from the weekly time frame, but I always recommend the daily, because the daily and the weekly are similar, but the daily just gives you a lot more candles. All right, so what are the best time frames? I start from the daily time frame, I work my way down to the 4-hour time frame, and then I work my way down to the 1-hour time frame to confirm my entries, and then I take my entries on either the 1-hour time frame or the 15-minute time frame. But I'm going to walk you down on this and show you a live trade I'm currently in right now. I got into the trade today, and the trade is still running in some decent profit, so I'm going to show you that trade going forward. All right, so let's go to the 1-hour time frame, like I said, to the daily time frame rather, like I said, so you can see or let's even do this, so I show you why the weekly is not necessarily where you want to start with. All right, so I've told you before in my subsequent video or in my previous videos that the market only moves in 2 directions, or in 2 ways. So there is the impulse and the correction, the impulse and the correction. So looking at this trade up, we can see impulse and correction. Straight up, we can see that this is the impulse. All right, and for that impulse, this is the correction. After that correction, this is another impulse. After that impulse, this is the next correction. All right, and after this correction, instead of an impulse, we have probably another correction here. All right, and then we have this impulse up, and then we have this other impulse down, and then so the market just moves in impulse and correction. And there's what we call I'm going to do a detailed training showing you what you should be looking out for, because there are reversal corrections and there is continuation correction. All right, so I'm going to do a detailed training on that, showing you what to look out for. When there is a reversal correction, it means the market is about to reverse. When there's a continuation correction, it means the market is going to continue in the direction of the original impulse. Okay, but that's not why I'm doing this video, because I don't want this video to be too long. So I'm just going to show you the best time frame. So the best time frames to trade on, like I stated, is first the daily time frame. And why are you on the daily time frame? The daily time frame is what gives you the overall bias of the market. All right, so based on what we stated earlier, if I show you this, so this can be said to be an overall correction, or a larger correction for this impulse. All right, that can be a larger correction for this impulse, but inside an impulse and a correction, there is still going to be another impulse and correction. Okay, so if you are breaking down this market now, you can see this is the impulse from the top there, this on the daily time frame to this point, that's the impulse, and then this, the whole of this is the correction, and this is another impulse. All right, and we can say the whole of this is a correction, or better still, we can just break this down so you're not confused. So we can say this is the correction, and now there's what we call pattern separation. In trading this way, we have what we call pattern separation. So pattern separation is when after a pattern is completed, instead of an impulse, there's another pattern that forms. All right, so from a pattern we get another pattern. But if you even want to look at this even further, you can see that there was a correction inside of this correction. All right, so there was a correction here, and then there was this impulse. So it was this impulse that probably led to this correction. Okay, now how do you know which impulse to focus on? That's why you want to start from the higher time frame. You want to start from the daily time frame, because it just gives you a general overview of what the market is doing. Okay, so I believe you understand why we look at the market like that. So you want to look for the nearest impulse to the price, or the nearest market action to the current price. So what I did when I came to this market USD card, what I did was to look for what is the market doing, and the whole of this looks to me like a correction. Okay, but why do I think that's a correction? Because this over here is an impulse. This is an impulse. Why do I say it's an impulse? Because it's not sideways, it's not moving sideways, it's actually moving rapidly downwards. All right, so I can call that an impulse, because after this overall move downward, guess what happened? The market started correcting sideways. All right, so most times the correction always happens sideways, or it can give you a shape like a flag and all of that. We'll go into details on that. So once I'm able to identify on the higher time frame, which is the daily time frame, that the market is actually in a corrective phase right now, the market is in a corrective phase right now, then I know that the next likely move is going to be an impulse down. But then how do we now catch the impulse down? That's the next thing we need to look at. Okay, so from the daily time frame I can see that the whole of this is an impulse, and then this is a correction. Now in the correction, you want to have a few swing highs and a few swing lows. Okay, you want to have a few swing highs and a few swing lows. So in this case, why did I choose to put this up here? You can also decide to use this point. All right, so let's probably use that point. So I see that this was a sharp move downwards. All right, I see that this was a sharp move downwards, and it broke this point right there. I don't necessarily do the whole support and resistance, but you want to see that it broke this, so that can be said to be a leg. All right, so from this point down here, that's one leg, and so I can trace my trend line from that leg, looking for the next touch. Okay, so which was what I did. So it doesn't necessarily have to be 3 touches, it can be a minimum of 2, and it can be the maximum of whatever the market gives. So you can have several touches out there. All right, so after we've seen that the market is in an impulsive phase, the next thing we want to do on this daily time frame is to look for the top of this formation here. All right, the top. So we can probably look for a potential double top and see what the market is likely going to do. All right, so I've marked this with this ray line as my top, the highest point in the market. So I'm expecting the market to either break out of this or come close to it and see what it does. So looking at this, I saw that the market did not break out on this highest point. So the next thing I want to do is look at how the market closed there. So the market gave me more like a pink bar. All right, so that's a sign that the market is probably not going to get to this top. Now what do I do? The next time frame will be the 4-hour time frame. Okay, so I go down to the 4-hour time frame and I'm looking at what the market is doing. So the market gave me an ascending channel, a correction in the daily time frame, and on the 4-hour time frame I'm seeing another correction. Why do I think that's a correction? Because we had this move here, we had this whole move from here up as an impulse, and then we had this correction, we had another impulse, then we had this correction. Okay, you see that correction, and then after that correction, guess what? We had an impulse, we had a correction, we had another impulse up, then we had an impulse down instead of a correction. So this impulse down here, chart is looking a bit messy, let me just clear that a bit. So you see how I'm trying to break that down on the 4-hour time frame. So whatever you look for in the daily time frame is exactly what you look for in the 4-hour time frame. So in the 4-hour time frame, I'm looking for impulse and correction. I can see this correction here, and then after this correction there's another correction here, and then there is this impulse to this high. Okay, now from that impulse to the high, the market was supposed to give another correction, a continuation correction, to tell us that it wants to keep going up. All right, but it didn't form that. Market didn't give us that correction, so the overall bias is already saying the market is going down based on the higher time frame. Okay, now what am I waiting for? I'm waiting for a correction that shows me that the market wants to continue downwards. Now I didn't get that. What I got was an impulse down, which was good, and after this impulse down, I was expecting another correction to keep taking the market downwards, but the market also didn't give me that. So I knew the market was still in a downward move, but I needed a confirmation. So what did the market do? I allowed the market to form. So the market started giving me all of this formation. Okay, so the market ended up creating an ascending channel, so the whole of this is an ascending channel. Don't worry guys, I'll do a breakdown of this strategy. I'll do a proper breakdown, but for now I'm just showing you the time frames I like looking at. So I look at the daily time frame first, and then I go to the 4-hour time frame. So from this 4-hour time frame, I can see an ascending channel with 3 points. All right, that's the first point, the second point, and this is the third point. So I don't trade trend line, so I would have, if people that trade trend line would have taken a trade up there, but that's not what I did. So the 4-hour already gave me a confirmation that this is likely going to drop. What do I do next? I go to the 1-hour. This is where I start looking for the next impulse and a correction. Okay, so I'm always waiting for, so I took this trade on the 30th. I took this trade, but it went on a loss. I actually lost this trade. So you see what I was looking for here. I saw this impulse, down, and then I saw this correction, and then I took this. So I was seeing this as a double top, a potential double top right there. Let me mark that with a real line so you can see what I was looking at that point. So I was looking at this as a potential double top. All right, I was looking at it as a potential double top, and then you know this didn't just play out. So this was supposed to be like an ascending channel of the reversal formation, and then this impulse down, and then this correction. So I placed a sell stop order. The market triggered me in, but of course didn't play out, which is normal in the forex market. Not every trade is going to play out. So after that happened, what was I looking for? I knew my overall bias was still a sell, so I waited for the market to give me a sign that it was ready. So the market went up there. The moment it went up there, I knew it was about to sell. So I needed an entry signal, which was a flag. Okay, I needed an entry signal, which was a flag. So guess what? I looked at this. I saw this as another ascending channel. So pattern within pattern. So there is a pattern of an ascending channel. There's another ascending channel inside the ascending channel. That just gives us an extra confirmation. Right? So once that was completed, I saw this ascending channel. So this was my entry right here. This ascending channel. And then I placed a sell stop order. I always enter with sell stop order or buy stop order. I don't enter instant market execution. Okay, so this trade triggered me in at around let me zoom this out a bit. All right, so this triggered me in on this candle, which was around 8 a.m. all right, this candle here, this candle right there. Let me see if I can mark that candle right there. Okay, that's the candle that triggered me into this trade, as you can see. All right, now I entered this trade with a 30 pips. All right, 30 pips stop loss. Now the market is running, let's see, at about how many percent? 2.4 thereabouts. So the market has gone up to 2.4%. So at this point now, my profit or my entry has been moved to break even. Okay, so my entry has been moved to break even, which is what my strategy says I should do. So around that point, that's where my entry is. So this trade is more of a risk-free trade. Okay, now if you go to the 15 minutes, you would see this clearly. This is even clearer in the 15 minutes. So you can see that this market gave me 2 potential entries. All right, so on the entry, I'm always waiting for at least 3 touches on the correction. So this can be seen clearly in the 15 minutes. So in the 15 minutes I saw 1, 2, 3 touches. So that tells me that this correction is probably completed. What did I do? I placed my entry down there and the market triggered me in. So after the market triggered me in, guess what? Give another potential entry. 1, 2, 3. So if I had missed this first entry, I would have entered the second one. But good thing I entered the first one, so there was no point to panic and enter another one. So yes, this trade is running right now in 2%. But what happens? What if the market comes and takes me out on this? Perfect, it's fine. I'm ready to let the market do its thing, because guess what? There is a lot of room for this market to keep coming down. Okay, so it has moved to this point now. It's possible the market can reject here and go up. So I'm probably going to move my stop loss at the end of the close of the day. All right, at the end of the close of the day, I'll probably move my stop loss to 1%. You know, this is weekend already, so I don't expect this market to reverse all of a sudden up there. But if it reverses today, that's fine. I'll probably just take a break even on this trade. Perfectly fine according to my strategy. But if it doesn't reverse today, then I expect another further correction here. All right, I expect another further correction here for a move. I expect something like this for another move downwards, because I see an overall downward move. Okay, so that's how I analyze the market. That's how I use my time frames. So you see that the daily time frame gives us all of this room from the top. Look at this, guys. From the daily time frame, I can see that there is room all the way from the top. Let me zoom out properly so I can show you what the risk is like, the risk to reward. So the market gives us a risk up to this point down here. So this swing low, that's the point I'm looking at, and this is going to give me a profit of about 20%. all right, which is most likely not going to happen all at once. So it might move up here or move down here and give a reversal before it continues down. So I might just catch this first 13%, which is going to be decent as well. So let's see how this trade plays out. But so far the daily candle is looking very healthy. It's looking like a healthy bearish candle. So let's see how it plays out. But this is how I analyze the market. So my best time frames daily. After the daily, I go to the 4 hours. All right, after the 4 hours, I go to the 1 hour to get my confirmation, and then once I see the confirmation, I take my entry in the 15 minutes. So this shows me exactly what the overall view of the market is. So I know what I'm looking for. So I know where my potential take profit is going to be. Like in this case, my potential take profit is here, because this is where the ascending channel started. So the 90% rule entails that it's going to get to this point as well. So that's where my take profits is going to be. I hope this video was helpful, guys. If you like videos like this, let me know so I can go ahead and give a breakdown of the strategy I trade, and then we can all, do this together. Thank you for your time. Do well to like this video and subscribe to my YouTube channel, so I keep bringing on quality content on this channel. Peace.